Welcome to this edition of Bitcoin Brief. We've got a full-packed team here with us today, which will be a great discussion on today's headlines. Today is Friday, August 7th. We have Jimmy Song, our author of Programming Bitcoin and our guru on all things tech. We have Tone Vays, who is our leading guy on all things trading, consulting, as well as education on Bitcoin. And we have a special guest with us, Rodolfo Novak, CEO of CoinKite, with us today. We have the markets are going down today. We got an unemployment rate out, down 10% across the United States. What's going on your end of the world, Tone?
Oh, wow. Same old, just stuck in COVID, getting more and more concerned that global travel will never open again. So same old. Hopefully, one day this will end. Very frustrating with these masks, but it is what it is.
We're still dealing a lot of COVID, a lot of frustration. And I hear, Rodolfo, that's impacting you in terms of shipping out there.
Yeah, we had a package coming from China that one took too long to come, and then it was lost in the Vancouver port for like 2-3 months. I had already written off, but eventually got to us. It's COVID is a mess.
Yeah, we're all having to adjust. And how are things with you, Jimmy?
Well, I mean, I was talking to someone the other day. It kind of feels like war a little bit, and we're in the fog of war. We have no idea what's going to happen, and nobody I talk to seems to know how this is going to actually end. So we're kind of in a holding pattern, and until there's a breakthrough somehow, and I think this lockdown will continue to get more and more unpopular.
Our government lady here who talks about the COVID stuff every freaking day on TV, which is kind of annoying, just announced that, like, I think she ripped the band-aid to the rest of the population. That's like they have no answer, and it's gonna sort of take 2 to 3 years and maybe a vaccine. It's like people are kind of freaking out that they finally realize that this is all sort of insane. It's gonna be interesting.
And Trudeau's still in Rideau Hall and with his beard and doing his speech every day.
I've lost track, man. I'm actually muted that name on my Twitter. I can't. It's insufferable.
All right. And I'm Christine Lee, your host and journalist in New York. New York. I miss New York. New York is just not the same. Everything's closed down. It's a new normal, and who knows when things will get back, but New York usually kicks back up. So I'm hoping things will get back together again. And looking at Bitcoin though, we're seeing flirt with the 12,000 line. More headlines out today. Let's take a look as I begin screen share. Okay, but first we want to actually mention Sept, a better Bitcoin backup metal plate. Rodolfo, tell me about that.
Oh, so we launched. I really wanted a Bitcoin metal backup plate that had 24 words, so I didn't have to buy 2 of 12. And I contacted all the people who make them, and nobody sort of had one. So we launched our own. It's like cheap, and people can back up their stuff. It's nice.
Cool.
Yeah, no, I'm holding one. I have one of those. I don't know if you can see in the little camera, but yeah, it's pretty cool. So it's a way not to lose your words.
Single plate design, 12 words per side, quality steel cut and etched in Canada. Etch marks chemically colored in black for better legibility. Designed to be small in size. I see you holding it over there. We also make an automatic punch available here for similar price as found on Amazon. And finally, no more need to shell out over $100 for 2 steel plates. It's well priced. Okay, very cool. Very sleek in design. Ledger app isolation bypass. Okay, this post will disclose a vulnerability in the Ledger hardware wallets that can lead to theft of users. An attacker can exploit this method to transfer Bitcoin while the user is under the impression that a transaction of another less valuable altcoin is being executed. If you use Bitcoin forks on your device, you could be affected. You should avoid using these Ledger apps until fixes are available. The issue has been disclosed to Ledger but remains unaddressed. See disclosure timeline. Rodolfo, what's going on here?
So this is an interesting little. I wouldn't call it a vulnerability. I'd call it more sort of like a bug. Not even. It's like a hack of usability. So a signature for a transaction is valid on all the Bitcoin compatible chains, right? And what this attacker does is he tricks the person into signing a Bitcoin transaction by showing the altcoin transaction on the computer UI. And it's interesting because there is not like, I mean, you could do some path isolation, you can sort of improve the software, but it's not a slam dunk. And I think like pretty much all the wallets are somewhat vulnerable to this. So Trezor, Ledger, Cold Card, not so much because we have a setting for it, but it still could sort of semi-trick the user. It just comes to remind people, altcoins are a liability. If you have shit coins and you do shit coining, you're exposing yourself to more attacks. There's less eyes and less people checking stuff for altcoining. It's the best solution is just stop shit coining mixed with your Bitcoin.
Jimmy, your thoughts on this? The Ledger device exposes Bitcoin, the mainnet public key, and signing functionality outside of the Bitcoin app. It presents misleading transaction confirmation requests indicating the selected app's addresses and amounts when in fact different transactions are being signed. What's your take on this?
Well, I mean, we talked about this the last time we had this show, and I ranted about how like Ledger's putting all these resources into altcoins, and basically, you know, I mean, they should make you know, multi-sig a lot easier and verify it on device and things like that. But instead, they're supporting altcoins, and you get bugs like this. So that's basically it. I mean, I think this is a different story than the Ledger response one that we pulled up last time, but this is the one that shows the vulnerability. Yeah, I don't like their devices because they are so focused on altcoins, and I wish they would just make their quote unquote Bitcoin app a lot better instead of, you know, creating new apps for Ripple and crap like that.
Yep. Avoid shitcoining, people, and you're already halfway there.
Tone, you want to weigh in?
Yeah, no, I mean, like these guys have said, and we covered it in our last show. That's pretty much it. You would think that Coinbase would learn from Cryptsy about how that went down with like some 777 scam coin that made Big Vern really pull the rest of the coins and get them out of Coinbase and run away to China. And then Coinbase basically followed in Cryptsy's footsteps and added a bunch of shit coins. They haven't been burned on it yet, but sooner or later, it happens to all these companies.
Okay, so another one to watch out for. Speaking of bugs, blatant bug led to 370,000 DeFi hacks, say experts. Decentralized finance protocol Open was stripped of 370,000 USDC in a double spend attack yesterday. According to experts, the not so subtle exploit should have been caught earlier. So in brief, a bug in DeFi's protocol Open allowed hackers to escape with 100,000 USDC. Experts say that the hack was avoidable. This marks the 6th DeFi hack in 2020 alone. Attackers raided the decentralized finance protocol Open, which deals primarily with options for ETH, was the subject of a double spend attack. Analysis from security researchers PeckShield elaborates that the double spend transpired due to an exploited smart contract bug, allowing attackers to openly plunder any and all USDC within Open's smart contracts. Tone, not a surprise here, huh? But still a reason to be a little skeptical of these other protocols.
Yeah, so again, it's DeFi. We've talked about DeFi a lot. We broke down on the show a little while ago, the whole concept of DeFi. And basically, I compared two similar projects. One is DeFi and one is not DeFi, but they serve a certain purpose. We compare the Celsius network, which lends money as a centralized entity, and a DeFi project like MakerDAI, which lends money and claims to be doing it in a decentralized way. And basically, the decentralized versions just have one extra layer of a potential fuck up. At least with a centralized version of lending and staking, the company itself that is totally centralized can run away with all the money. In the DeFi version of the same exact idea of people with shitcoins that have nothing to do with them, stake them for others to borrow them at interest. As an example of a DeFi company, not only does the company that claims to be building the decentralized DeFi protocol can run away with all the money, but a hacker can as well that actually knows how to read the code. That's so far, that's all that DeFi has amounted to. Our claim on this channel that that's pretty much where it's going to end. But a lot of people think that this is the future of all finance. So I'm gonna go ahead and let the other guys on the show talk about it some more.
Hey, Rodolfo, do we understand a bit about the tech going into this? What happened here? And I suppose you're not surprised at all by this.
I mean, I kind of stopped looking at DeFi tech because it's all sort of hand waving JavaScript on top of some Ethereum crap, and then I really don't know the details, but it's quite amazing how unsurprising it is. It's like they essentially run by oopsie daisies, right? It's like, oh, we're going to take all this money and deposit into this DAO thing. And then people go and they, buy the penny stock essentially, right? And then if the developers go, oh, oops. And it's proof of burn. That's essentially what DeFi is. Do they still have like those the BTC control locked in some Ethereum DAO as well? Because those would be a beautiful proof of burn. I can't wait for Ethereum to sort of like make sure that there is like, I don't know, 20, 30, 100,000 Bitcoins that are unmovable. We're going to thank you dearly for making the supply of Bitcoin even smaller.
Well, that's not quite how it would work, because basically it's a synthetic Bitcoin on Ethereum. So the Bitcoin is held in some central repository, and then they represent it on Ethereum. So if that happened, it would just be the representations that would get burned.
Oh, so it was pure bullshit as usual. I thought they had a DAO with like Bitcoin keys sort of thing. So like somehow it could sign for the Bitcoin to be moved. And that would have been a lot of fun.
I mean, they have something like that, but all of those things have like backdoors and things.
Oh, okay. So they have backdoors. That's not as much fun. It's not a real computer then.
No, it's always decentralization theater. That's
right.
The thing about this is, the open and new DeFi projects are popping up like ICOs were in 2018. I mean, it's just one after the other, and of course, most of these people don't know what they're doing. I would say probably all of them, and they're playing with very complicated financial instruments. This one in particular was with options. And, options are understandable after a few hours of research and things like that, but it's not easy to program. And the thing is, this wasn't even a complex error. I think it was something like authenticating on a particular admin backdoor or something like that, which they apparently didn't do, so anyone could go in and take the money, and that's how it got hacked for 370,000 in USD.
Yeah, I wanna throw something else in there. So throughout the 5 years or so that I've been doing this, probably close to 4 years now that Jimmy's been joining me on these shows, constantly I am somewhat honest when I say I'm not digging into this project. It is complete and utter bullshit. And every time I've actually, and you get trolled like crazy when you talk shit about a project that you haven't actually researched, because every single time I've taken the time to research it it's always turned out to be worse than my original criticism. Always, every single time. Like the moment you actually start researching, you're like, oh my God, this is way worse than I thought it was when I didn't know the details.
Yeah. Yeah, and the sad reality is, like with these DeFi projects, essentially this has caused the Ethereum price to pump because people think there's a lot of free money yield farming or something like that on DeFi. I think but you know, as this hack shows, you know, trying to do that is a fool's game. I think Bitstein had a take on this. His tweet was, it's not decentralized finance, it's defective finance, and that's basically what it is. It's all defective, right? It's all LARPing on the real financial markets that exist, and that's, you know, this is what you get. It's insecure. It's you know,
They are remaking the stupid on top of stupid.
Yeah, I mean, it's ICOs all over again, except they're just calling it DeFi right now, and that's, you know, just like ICOs, they're pretending to be decentralized when they're really not, and just like ICOs, people are they're saying that you're going to make more money by putting your money into this, except at least this time they're being a tiny bit more honest, because I guess you can win in a zero-sum game like this one is. I don't know, but they're giving you financial jargon as a way to justify putting money in. But you know, it's look at the chart on the left, right? It's gone up 59% since July, and you know, this is largely the reason. It's stupidity like this.
Yeah, well, I want to show you towards the end of this article. For those still holding the platform's now illiquid tokens, Open has offered to buy them at a 20% markup on the crypto exchange Deribit. Despite Open providing a litany of remedies, including a bug bounty program and enhanced auditing, TechShield's Wu remains skeptical that DeFi won't suffer the same again. Open's exploit nevertheless marks the 6th DeFi hack this year, and with security experts anticipating more to come, DeFi's narrative as the new financial frontier may be more akin to the Wild West. So
it's a JavaScript mentality. That's what all that is.
Yeah, I mean, we can't find our own bugs, so we'll pay somebody else to find them for us, because we can't bother to do QA. I mean, that's it. Who runs this stuff?
I know, like, right? It's like
do you know any engineering, good software engineering practices whatsoever? It's
maybe I'm going to the wrong places.
Amateur hour over here. It's but then again, when has it ever been not amateur hour in this space?
I have never met a DeFi like technical person, like ever.
Yeah.
Was it like the same thing with the ICOs? It's like 3 guys
that
are just going around and coding all of these different projects of different tokens?
No, not even, Tone. So a lot of the stuff is like it's like a couple money salespeople, and then they hire some team somewhere, like of professional makers of DeFi crap, and then well, anyways, and then catastrophe ensues.
Because that's what it was. Like in the ICO days, there was like 3 people that would write the white paper all over the world. You know, you just hire a white paper writer. They just they write all the white papers for everybody, and then you just outsource.
Oh, that would be fun to do with GPT-3.
Yeah, that's right. You could have.
I'm sure we could spin out a really good DeFi white paper just using GPT-3.
Oh wait, better, and we charge for it. You have to pay in Bitcoin to have your DeFi paper made.
Yeah, and then tweak a couple of parameters in a smart contract that already exists and sell it as a package to somebody that actually wants to take the risk.
Jeez, I remember reading that Schemit white paper, 40 pages, and I went through each page and I tweeted it out with the scam on each page, and it was literally like a blog post. It was the most horrible piece of writing that was meant to be even slightly technical I've ever read.
Yeah, so GPT-3 would probably do a better job. Yeah.
Speaking of hacks and bugs, I want to point over into this new headline. Hacker nets over 5 million in Ethereum Classic 51% attack. New analysis has revealed the recent Ethereum Classic attack was far from a glitch, enabling a double spend attack worth millions. So in brief, analysis from BitQuery has revealed the recent Ethereum Classic 51% exploit was not a mistake, but an attack. The malicious miner was able to double spend more than 800,000 ETC worth more than 5 million. The attacker spent less than 200,000 on buying hash power for the attack. In essence, the hacker sent ETC from an exchange to his own wallets, then back to the exchange on the original ETC blockchain using more than 51% available ETC hash power. The attacker then mined thousands of blocks, some containing transactions sending ETC to other wallets he also controlled instead of back to the exchange. Finally, the attacker broadcast his malicious blocks, causing a reorganization of the blockchain that replaced real blocks with those created by the attacker. Jimmy, you want to take this one? You see the tech here. You're not surprised though.
No, not at all. I mean, they're a minority fork of Ethereum, basically. And the thing about Ethereum is they try to go away from ASICs, and they've been preaching ASIC resistance for a while. And that means that it's easier to attack, because at least ASICs are pretty costly and they're application specific. So in order to get a lot of the hashing power for a particular proof of work algorithm, you would need, it would cost more. But instead, what you could do with something like Ethereum Classic is just rent a bunch of GPUs. And that's basically what this person did. And they 51% attacked it, double spent it on an exchange. I mean, it affected the price a little bit. I mean, I guess it came down like, 5% or something like that. But the interesting part to me is that despite a ton of money basically being double spent, the price doesn't go down, because for most holders of Ethereum Classic, they don't care. They couldn't care less about this stuff, because it's really the exchange that gets screwed and not them. So it's like, if I'm not getting screwed, if it doesn't affect me, I don't really care. And this is something that we've seen in other 51% attacks. I think we saw that with Verge and some other ones. But it's what happens. People don't seem to care as much about 51% attacks as we thought. The other thing from this story is basically that, when you have a lot of money, invested in something like Ethereum Classic, like Barry Silbert does, you would think he would want to make sure that the development around it is actually going well and stuff, but he doesn't. And really, he just sort of bought up all this Ethereum Classic way back when it started, as like a casino or something. If they had competent developers or something like that, they would have changed this stuff a while ago. But as far as I know, Ethereum Classic actually doesn't have much development at all. So such is the land of altcoins, that you have very few developers and a lot of speculators, and this is what you end up with.
It's misaligning incentives. It's like they're playing stupid games, they win stupid prizes, right?
Yeah, the famous Seyfried quote.
Rudolph, do you want to jump in on this? What's your take on it?
That's what Jimmy said. There really isn't much here. It's again, right? If you have a system in which there is no real value or use, nobody's going to put in the time and effort to maintain it, right? This chains need to be healthy, right? Healthy with mining and healthy development. And if there is no use case for them, they're going to die off by being chipped away from hacks and different attacks on them.
Yeah. One other thing I forgot to mention. If this isn't a good case for why exchanges need to delist Ethereum Classic, I don't know what is. Because if you as an exchange list something like this, you are under threat of being 51% attacked all the time.
And then you're liable for the coins, right?
Yeah, I mean, basically, it's the exchange that suffers. So eventually, this will happen with most of these altcoins. And at that point, like places like Binance are absolutely ripe for, large losses of money. So, yeah.
Yeah, we see here that the hackers spent more than 12 hours sending ETC to the exchange to be sold or converted into other currency. After the offending blocks were reorganized into the Ethereum Classic blockchain, the ledger showed that those transactions sending ETC from wallets back to the exchange never happened, instead remaining in the hacker's possession. These double spend exploits are the reason 51% attacks can be so catastrophic for blockchains that are meant to be immutable. And I'm going to point out to this tweet via BTC's. Oh no, wait.
Oh no, that's the other one. Mine is there somewhere.
All right, hold on. This one. It's Tone's tweet.
Yeah. So man, there's so much going on here. So this is a three-fold situation here. Now we talked about one of them earlier in the show, in that this is the liability that every company takes when they add shitcoins to their company. So this is a Barry Silbert problem, because he's holding, the trust for, and he was the big guy behind Ethereum Classic. He's like the Vitalik Buterin of Ethereum Classic. So obviously, he's getting probably a lot of shit from investors and other people that he has convinced that Ethereum Classic is the future. Well, that's what you get for taking on the mantle of being a shitcoin leader. Now, the exchanges are obviously going, what the hell? Jimmy, you wrote a great Medium article a long time ago, says why exchanges delist coins. Great read. If you guys would just want to Google that, why exchanges delist coins. Jimmy wrote that in his Medium. So this obviously tells exchanges, hey, I got to stop providing support for these old coins that can get 51% attack. We talked about the wallet situation of what happens when you let people hold these old coins, because that could also go away. And here's the thing, and that's what my tweet tried to explain. Eventually, this will happen to every single proof of work coin, because 51% attacks like this could only happen in proof of work. Proof of stake, they're already 51% attack from inception, so that doesn't matter. So proof of stake, so this is irrelevant. Like proof of stake, they control everything. That's they're centralized. They got, most of them have like 21 people that will decide the fate of the future of the token. So that part is already irrelevant. But this will happen to all of them. And this is what people don't realize. Like, well, it'll never happen to Litecoin. Yes, it will. It will happen to Litecoin for the things that Rodolfo mentioned a little bit earlier. It won't happen to Litecoin first. Here's the thing. It will happen to shittier coins that have the same exact mining algorithm as Litecoin, until eventually only Litecoin is the leader in script mining. I mean, it might already be the leader in whatever mining algorithm they use, and eventually it will happen there too. And the reason why it easily happens in the lesser coins is because you have an up-chain area where you can redirect that mining to. If you 51% attack a shittier coin for profit, you can destroy that coin and you don't even lose the mining hash rate. You can then move that hash rate up the chain to a stronger coin until all of those coins are destroyed and you only have one coin left in that mining algorithm. And now, even if you have one coin left in your mining algorithm, you can still move up the chain. You will destroy your mining algorithm as long as you can profit from selling the Litecoin that you 51% attack into Bitcoin. And that's what people don't realize. As long as there is an anonymous, borderline anonymous and immutable coin up the chain, your coin will always get 51% attack, whether it's in proof of stake, which is an embedded 51% attack, or it's a proof of work, which you just have to get enough hash power. And the reason why it won't happen in Bitcoin, well, it's possible to happen in Bitcoin, but it will happen in Bitcoin last. This won't happen in Bitcoin because there's no up the chain where you can move that hack into immutably. So even if you destroy all other coins and all you have is Bitcoin, 51% attacking Bitcoin this way becomes extremely difficult, because how do you exit with the money? You can only exit with that money by moving it into, say, gold, but that's not like anonymous or immutable. Like, you can't do it. So
yeah.
That's what people don't comprehend. I don't know if you guys want to shut this idea down or whatever. Rodolfo, say
No, Bitcoin is the asset of settlement of last resort. That's true for all the crypto stuff. You know, it's like I was saying, it's a sea rise lifts all the floating shit, right? So all this little toy projects are floating on top of Bitcoin, right? And so everything is good for Bitcoin. You know, these guys will attract more money into the space, and then eventually their projects die, either because they get liquidated or because somebody steals them, but they all hold the value in Bitcoin. It's great.
Right. All these hacks eventually move the money into Bitcoin.
Yep, and you know, I think during this next run, I think what we'll see is, you know, it becomes really profitable to exploit these exchanges, and they'll have longer and longer confirmations for everything, which will completely destroy the user experience for trading a lot of this stuff. But eventually, you know, that'll happen, is that they'll get exploited and liquidity will dry up, and that means like even more crazy price volatility for these, and you know, they'll die eventually. But that's a path that we can see right now.
And a lot of people think that 51% attacks, again, proof of work or proof of stake, somehow are being technologically prevented. They're not. They're not being technologically prevented at all. No matter how many fail safes your proof of stake nonsense takes. I mean, Ripple can't get 51% attacked. It's like one node and one developer team, right? And no mining. Well,
I mean, that's a model everyone's going to probably move to.
Right.
But at that point, like you have no claims on decentralization at all.
Right. Now, Ripple can have 100,000 nodes, but none of them matter. The only node that matters is in the Ripple building. That's the only node that matters. So,
that's right.
Yep.
But like in this case, like 51% attack, it's a game theory. Can I profit from it model? And you just can't profit in Bitcoin because there's 51% attack it, because there's nowhere to move the money to.
Yeah.
Speaking of forks, I want to move on to this next story. We see a tweet by BTC's Y Haiyang announcing a fork of Bitcoin Cash under the ticker BCC. This is unfortunate, but also an amazing opportunity for those who have been unhappy with how things are going. Some will want to start a war. Those who want freedom must not let them. And here's another tweet from Hypo Yang. If Bitcoin Cash removes the UTXOs that never moved since the fork, we can double the block reward and fund the foundation without the IFP and without breaking the 21 million limit. Jimmy, more drama in the Bitcoin Cash camp. What's going on here?
Well, it sounds like what Hypo Yang wants to do is to fork Bitcoin Cash, or BCH, not BSV, but BCH, and because they're having some disagreements with Amory Sachet, who is self-proclaimed benevolent dictator for life on the BCH project. So essentially, what's happening is Hypo Yang is with Via BTC, and if you remember back in 2017 when BCH started, they're the ones that actually funded Bitcoin ABC, or Amory Sachet, and you know, what became Bitcoin Cash. And the reason they did that was to protect themselves against the user-activated soft fork. And this was you know, what we talked about in the user-activated soft fork anniversary show. But basically, they have basically disagreed, and Hypo wants to create his own fork to, you know, I guess go more towards what he wants. And One of the things that we're finding out about this fork is this possibility that they might just steal a bunch of funds from UTXOs that never moved before the fork. So this is pre, BCH hard fork, August 1st, 2017. Anything that hasn't moved before that, this includes Satoshi's coins. Anyone who didn't sell their BCH fork or whatever, what Hypo is proposing to do is you just sort of take all of that and use it as more block reward, and this is necessary because, first of all, this coin's not going to be worth nearly as much as Bitcoin Cash is right now. So it's going to reduce the block reward to currently it's like 6.25. So say it's worth like $100, it's $625 worth of mining reward that someone would be getting, and that's like insanely low security, especially if they keep the same proof of work, which BCH and BSV have also done. So at that point, you can double spend it very, very easily. So that means that what they're proposing to do is take some of the unmoved coins, including Satoshi's coins and stuff. I imagine this would be in the millions of whatever BCC, I think, is the new ticker that they want to make. They would put that towards mining rewards, and basically this is just theft, right? Like they're taking money from other people in order to give it to the miners in order to have a chain that's less susceptible to double spending, kind of like what we saw in the other story. So really interesting development. I think I put out a tweet a while back or a few days ago saying, the balkanization of BCH continues. They've already split once with BSV. It looks like they'll split again. Who knows if BSV will split again, but you're going to continue to have this sort of dynamic in something that's centralized, because you can split with almost no cost, and that's what you can do.
I just have one comment on this. It's fascinating because they essentially invented a new business model a few years ago, where these guys they fork something, claiming some higher power, higher idea, moral, whatever, and then they make a following, and then they take the money from the suckers, and then they dump their coins on the suckers, and they go back to Bitcoin. This is like, it's amazing to me that anybody will follow these forks or these things, and because remember, right, when for something to have a price, there's a buyer. So there is some sucker on the other side of the exchange actually buying BCash or SV or CC or whatever the crap it is, and it's really because these guys are like dirty salesmen. They're convincing these people to buy this crap, saying that they're keeping it, but they're probably the ones on the exchange dumping their bags that they just created. It's amazing.
Tony, you want to weigh in on this one? Does it kind of make it irrelevant to have all these side forks of Bitcoin Cash?
Well, again, what are these exchanges going to think? Like a lot of exchanges, like Binance and some of the others, they delisted BSV for political. Here's the irony, right? Like they didn't delist BSV for technical reasons. They delisted BSV for political reasons because Craig Wright just went a little too far with him pretending to be Satoshi. Like, at which point do these exchanges start delisting this nonsense for technical reasons? Because it's insane. So I'm not surprised. Like Rodolfo said, in 2017, this new model of hard forking and creating new money from Bitcoin became a business. And they basically, this is what happened. This is what Bitcoin avoided. Once you give miners all the power, which BCash did, the miners will do what they want, including, hey, we're going to take Satoshi's coins and we're going to give it back to ourselves. Like Via BTC is one of the leading miners in the BCash fork. So they are very incentivized to, well, we're redistributing this lost Bitcoin back to the community in the fairest possible way through mining. But we own all the mining, right?
That's right.
It's this bullshit, and it's hilarious because there is absolutely no decentralization in BCH. I mean, everything is owned by like 2 or 3 people, or if not one person. I mean, Roger controls the media. Roger controls a major pool, and like, who the hell is coding on this shit? And Marissa Shea is the only one, but he's gonna split. I mean, this model is perpetual hard forks, and Ethereum's no different. Ethereum's going to hard fork again. Like, how the hell are the miners just going to stop mining Ethereum? I can't wait for that that split to happen between ETH and ETW, Ethereum work. I should have copyrighted ETW so that when it splits into ETW and Ethereum work, I can charge a royalty on the Ethereum mining stuff, because I've been talking about that in forever. So it's I mean, basically, but nobody cares. Here's the thing. Like, no one is running these nodes. No one is really using BCH. So like, that's the thing. No one really cares. And people just need to wise up.
Does it make it more, expose it to more 51 attacks, being more losing relevancy and all that?
That too, and also going back to our previous story of 51% attacks, since all of this hash rate is now being split, first it was all the hash rate was in one place, then BSV took half that hash rate, now BCH is going to fork again, so that hash rate is going to split again, so it makes each one easier and easier to 51% attack. And even if you are even if you control like all the mining on BCH or one of the 2 new BCH forks, and you start to feel that you're running out of suckers buying the token, you're just going to go in 51% attack Binance or any other exchange that's dumb enough to be holding your token. Like, again, all of these stories from today, they all like merge into the same concept. And this is why we're shitcoin minimalists, because this is insane.
All right, great. Moving along to our next story, we're going to take a look at Hong Kong. Hong Kong's rich are moving gold out of the country on fears of what China's draconian law may do to its autonomy. Just in brief, Hong Kong's rich are moving gold out of the capital to ward off the impact of a draconian law. The FT said one Hong Kong-based gold dealer and provider said the trend began when the city faced mass protests over the last 12 months over an extradition bill. Investors are moving gold to Singapore and Switzerland, according to a source telling the Financial Times. China imposed a strict law in May over Hong Kong's legislation, and critics say it violates the one country, 2 systems that has been in place since 1997. That law basically allows China to bypass the city's legislature on national security concerns. Tone, is this having an impact on gold, and what's your take on this politically speaking?
Well, politically, this is unfortunate. It's kind of unfortunate that bad things happening around the world are good for Bitcoin. It's not how I want Bitcoin to go up in value. I would love for Bitcoin to go up in value as the world is becoming better politically. But Hong Kong is basically the freedom of Hong Kong is, what made Hong Kong great was the financial freedom, that they had. And a lot of that is dying. So people that are holding their gold in Hong Kong are very concerned. Singapore, from what I know, is still very, very good to store your gold in. I've been to one of the vaults. I've been to like a huge gold and silver vault. They also do Bitcoin storage for you if you don't want to hold it yourself. It's an insane facility. I'm like holding like gold bars. It was really cool. And so people in Hong Kong are going to want to move their gold, but it's hard to move gold, especially in this world of COVID where you can't even travel. And that's gold's biggest issue. How do you move it? Because they can confiscate your gold at the border. So it's great. This is awesome for Bitcoin. people in Hong Kong will realize that Bitcoin is the best way to protect your value before someone with a bigger gun takes away your money. And this has always happened historically. It's unfortunate. Like I said, I'd rather see more freedom and people be happy about holding their gold in Hong Kong. But it looks like it's going to be being converted into Bitcoin more often.
Hey Jimmy, what are your thoughts on this law out of China? And yeah, is this to say that now's the time to move some gold?
Yeah, I mean, they're more or less forced to, because their gold might get seized, and the last thing you want to do is lose all of your money, basically. So this is what they're doing. I mean, it would have been better if they kept it in Bitcoin, because then they wouldn't have to pay for, you know, moving all of this gold. And moving gold is expensive, especially over a very large area. I guess it depends on how much gold you have. But this is, it's not simple. It's not easy. And like the regulations around it are difficult. It does look like Switzerland seems to be the place of choice and whatnot. But yeah, it is sort of a sad commentary on, you know, how many places there are with freedom, because Hong Kong like got to be as rich as it is in large part because they were less regulated than mainland China. I mean, it's more or less the same exact people. The only thing that was different was that Hong Kong had freedom, mainland China really didn't. And, you know, I would like to see more small states like Hong Kong pop up all over the place, because I think they would all do well. But unfortunately, you know, they're just sort of in the wrong geography and things. And, you know, this, you know, the one country, two systems kind of thing, I don't think is really viable anyway. So yeah, this was inevitable, sadly.
Hey Rodolfo, what do you say to those people who are still holding physical bars of gold and moving it around in cases of draconian governments?
I mean, you know, yellow lead, it's not a good medium of exchange, right? I mean, it's heavy and it belongs on PCBs, right? It should be used in industry, not for people to hold value. It's kind of fascinating story, right? Because this has been happening throughout history, where wealthy families, when there is a war coming to their area, right, they'll take their gold, they'll take their paintings, they'll take their important things, and they'll leave their properties, right, and go to a place of safety. And then when the war passes, they make claims for the land, they bring back the gold, they bring back their paintings, and life moves on, right? That's how a lot of these very rich families or royalty sort of did throughout time. Now, what Bitcoin does here is essentially gives the same power that like these more wealthy people had to do the same with their wealth. So Hong Kong people can take their wealth, buy Bitcoin, and send it out or keep it in their heads. And, you know, it costs a lot because most people are not going to send the literal physical gold out of Hong Kong. They're going to probably sell the gold in Hong Kong and then rebuy in the place they want to store it. And then, of course, there's going to be some people that will try to take it. But, you know, try flying with gold is not exactly possible. They will stop you at the airport. So anyways, yeah, it's just fascinating to see. I mean, you know, it's sad to see the fall of Hong Kong, but that was kind of expected too. I mean, you know, you can't stand up to a country with, you know, that's much bigger than yours and is right beside you. It's just pretty hopeless there.
Yeah, I want to jump in real quick as well. I know we need to move on, but people don't realize how hard it is to move gold. And historically, it was easier. It's harder to move gold today because of technology. Metal detectors have made it a lot more challenging to move gold.
Yep.
Like airplanes made it easier, but metal detectors made it harder. But if you think gold is easy to move, I mean, I have like a 1 kilo bar of gold. It's not that big. It's about this big. It's just 1 kilo. And that is a big problem because 1 kilo of gold right now is about $60,000. And even that is a problem to move. What do you do with it? like I know people that can convert it into Bitcoin, not in this country. So now I got to get it to another country, and I don't know if I want to travel with a 1 kilogram bar.
You can't. You can't. It's illegal. You're gonna have to declare it in and out of the country and then into the next country.
Right.
And they will find out. Shows up
yeah.
in the middle. Yeah.
Yeah. I mean, like that will really stand out in that scanner.
Oh yeah.
Go through the airport. It's really gonna stand out. So you got a problem. That was a mistake. Like if you're gonna hold gold, hold it in 1 ounce coins, and those are easily movable. Like I've traveled all over the world with a 1 ounce coin in my bag. No one has ever said anything. But if that was a 1 kilo bar, they'll say something. So and if it's that difficult to move a 1 kilo bar, not to mention a lot of people think that it's fake, so they have to drill it to make sure. Like gold is very challenging, unless you let someone else be your custodian, and then that custodian better be in a country, because if your custodian was Hong Kong, you're screwed. If you're not, a Hong Kong resident, but you were storing your gold in Hong Kong, and then all of a sudden there is a law from China that confiscates all the gold in China in Hong Kong vault. What are you gonna do about this?
Shit out of luck.
All right. Difficult times in this world, a lot of crazy things happening, political tensions rising, etc. Taking a look at this next story, we've got a developer grant, Marco Falchi, Bitcoin Core developer, from his blog. Let's see, introducing Marco Falchi, OKCoin's 4th developer grant recipient. Falchi's work supports important infrastructure improvements as a Bitcoin Core maintainer. OKCoin is pleased to announce Bitcoin Core contributor and maintainer Marco Falchi is the next recipient of our independent developer grant. Based in Germany, Marco will receive a sum within the range of our previous 3 grants as a Bitcoin maintainer and the most active contributor to the Bitcoin code since 2017. Marco is presently dedicated to the improvement of Bitcoin's test infrastructure, which ensures the reliability and security of the decentralized network. So Jimmy, are you familiar with Marco? What are your thoughts on this development?
Yeah, so Marco's been contributing for a while. I think he was working on his PhD, but he got sucked into Bitcoin basically after he finished his PhD and submitted his dissertation. I think he worked with Chain Code Labs for a while. But yeah, I mean, Marco's merged a bunch of my commits, so I have fond feelings for him and everything else. But yeah, very good developer, based in Germany. The fact that OKCoin is going to support Marco is a great thing. And Marco is one of, I think, 5 maintainers right now, including Michael Ford and Vladimir Vanderlaan and I think Jonas Schnelly and one other one, which I can't remember at the moment. But yeah, I mean, being a maintainer is often a thankless job. I'm glad that OKCoin continues to support Bitcoin developers. I think they gave a grant to Amity Uttarwar and several others. So this is great. I'm hoping more companies step up like this and provide grants like OKCoin and Square have been doing.
Rodolfo, you want to jump in? Are you familiar with Marco and his work?
Yeah, well, I mean, I don't follow as much as Jimmy does, but you can definitely see Marco's commits on Core. There's a lot of them, and I think it's great. It's nice. This is like one of the main things that sets Bitcoin apart, right? It's like you see the amount of intelligent people, getting grants to keep Bitcoin, healthy development-wise. It's a fantastic thing.
Right, Tone, any comments?
No, I was going to say what Rodolfo said, is that this is what separates Bitcoin. I think I'm going to write an article. I've been meaning to. I haven't written anything in 6 months, and just talk about what makes Bitcoin decentralized. And one of the things that makes Bitcoin decentralized is the decentralization in code development. Because all these other shitcoins, they can claim, like Ethereum can claim we have 800,000 developers, but do they matter, right? Like how many developers on Ethereum actually matter? There's like 2, maybe 3. In Bitcoin, there is literally 100 developers that matter, and some even within those that matter, some matter more than others. So this is great news.
All right, congratulations, Marco, on this development. We'll also take a look at the latest development from Coldcard, export deterministic entropy. Also, there's a tweet here that kind of goes through it, a thread on BIP85 setting up a Coldcard wallet from scratch and using a primary seed to derive entropy for Blue Wallet and Bitcoin Core, one seed to rule them all, one key to find them, one path to bring them all in, a cryptocurrency bind them. It's very poetic. The cool thing about BIP85 is that it enables one to create several keys for several Bitcoin wallets from a single primary seed, i.e. you have one seed to protect and all your Bitcoin wallets are safe, perfect for people who like trying several wallets. Coldcard Wallet has implemented BIP85 in their latest firmware release because they're awesome and they have the coolest gear. So get one for yourself, open the tamper-evident packaging, plug it into your USB cold power and follow along. See the pictures there. Why use USB cold power, you ask? Because computers are full of malware and viruses and shit. We're talking about Bitcoin here, the best asset the world has ever seen. It's not worth the risk. Keep your private keys offline. Get a cool case from Crypto Cloaks. Power up your Coldcard wallet, accept the terms, confirm the bag number, each matches the number on the screen, choose a pin, etc. But Rodolfo, I'll let you take it away as you know all about this.
This BIP was written by Ethan I don't know how to say his last name, Kazakovsky. And it's a really cool BIP. I was really excited and I was sort of surprised how like, nobody had sort of like implemented this aside from one test suite. And it's really cool because you can essentially, do you know how you have your 24-word seed for your hardware wallet, right? Or for your whatever wallet you use. And then there is all these other wallets you want to try out, like phone app wallets or desktop wallets or multi-sig things. And essentially, you need a new seed for everything, right? Because you don't want to share the same seed between different wallets. And a lot of these other wallets are sort of like lower threshold of security or privacy. So, it's like your phone wallet with less money and that kind of stuff. So what this BIP does, it's really awesome, is you can essentially generate new seeds from the original seed. So you only need to do really one set of backups for that original seed. And then you can sort of generate more of this 24 words deterministically, so that, say your Blue Wallet or you're fully noded, you can put that seed there, use them. But if those wallets sort of get damaged, lost, or whatever, you can go back to your Coldcard or your other BIP85 implementation and regenerate that seed again. So you forever will have that single backup that sort of rules all the other backups. I personally don't like the idea of people using child seed generated from the original for large amounts of money. Always have that sort of being the initial. It is hardened, right? So there is no way of going back to generate the original seed. But anyways, this is just a very cool, sort of very useful to users. So it was pretty sort of pumped about it.
Cool. Going on to the mempool, that's for Jimmy out there. Tell us what's going on with the transactions.
Well, it's not as bad as earlier in the week, but it's still kind of a little bit congested. If you want to get in transactions in the next few blocks, you're going to have to pay at least 40 or 50. If you need to get it in the next hour or so, you could probably get away with like 10 to 12. Overnight, I think we're going to probably clear in the 3 to 4 range. Over the weekend, we'll probably start clearing some of the 1 Satoshi per byte, but don't count on that because there's just so many of the 1 Satoshi per byte transactions out there. Yeah, I mean, the same pattern seems to be happening over and over again, which is that during the weekends, you tend to clear a lot of these transactions. And during the week, you need to pay a lot more. And given the price action that we've been seeing, this is not a surprise. And you can see that that there was a big bump in fees during the times when we had more price action.
All right, cool. And we want to remind everyone that Programming Bitcoin is out there to buy by Jimmy Song. Learn how to program Bitcoin from scratch. Learn how to program the Bitcoin library with this hands-on guide from one of the leading teachers on Bitcoin and Bitcoin programming. Author Jimmy Song shows you the basics, including the math, blocks, network, and transactions behind this popular cryptocurrency and its blockchain payment system. You'll also learn how simplified payment verification and how proof of work works. And thank you, Rodolfo, also for that latest BIP85 cold card update for us. I'm going to hand over the price analysis to Tone as soon as I figure out how to shut this thing out. We see a pullback in the markets right now. Bitcoin is shedding some weight there, as well as the S&P 500, the Dow Jones, and the NASDAQ. What's going on, Tone?
Yeah, let's go take a look for a very quick update on the price. Well, as always, we begin with a weekly chart. Today's already Friday, so I'm just keeping an eye on, will we close above 11,600? That's, for me, the key number. Closing.
You're not showing your screen, Tone, and you just oh no, not the same.
Technical difficulties.
Hey, Tone, your screen's not sharing. Oh, now it's sharing. Okay, yay. Okay.
All right. All right. Am I sharing again?
Yeah,
yep,
you're sharing.
You're good.
Okay, good. Here's the weekly chart. Here's what I'm looking at. All of my oscillator metrics still look pretty good. And I'm just keeping an eye on making sure that Bitcoin closes above 11,600 for the week. We got 2 more days. We'll see how it goes through the weekend. But right now, I don't really see a big reason to panic. Here's the daily chart. Again, the metrics don't look too bad. And well, maybe the RSI is starting to come down. And we're still hanging in there, consolidating near 12,000. That's usually a bullish sign for an additional breakout. So let's see what happens. We did just pull back down. Here's the 4-hour chart. We fell down pretty hard. And those that bought this dip perhaps did well. You can see my t-shirt, BTFD. You know what that stands for. I am bullish in the market, looking to buy potential dips. I missed this one. I didn't have my limit orders on GBTC low enough. They are set lower at the moment. So this would not have gotten me in this morning, assuming I'm assuming this happened during trading hours. I haven't looked at the price until just now. So far, still good. I don't really see this panic. I don't really see a panic yet. So that's what I'm looking at. Gold taking a little bit of a nosedive here as well. I'm talking about
Tone, your screen isn't changing. You're still on the weekly.
Oh, jeez.
Or daily, sorry.
Like again, I don't know. Like we were talking about my computer earlier. I'm looking to buy a new computer, so my computer finally went on sale and immediately got sold out around the world in like the first 2 days, and I missed it. So I don't know when it's going to be back on sale. I know exactly what I'm going to buy. It just has to be available for me to buy it. It's a laptop that I want. And I know everyone, like when you say that, it's kind of like, I want to buy Bitcoin. And then like 100 people start trying to convince you to buy their shitcoin. It's the same thing here. Like this is the computer I want to buy. And then like 100 people are giving me other suggestions. So when it comes to Bitcoin, I kind of know what I'm doing. When it comes to buying a laptop, I probably don't. But I've spent enough of my brain cells deciding on what computer I believe will work. And that's what I'm going to buy. And if after I buy it, it doesn't work and I spend $4 grand on it, I'll just have to buy another one. So am I still not screen sharing?
You're
We
no
are not
longer screen sharing, you're re-screen sharing.
It's black now. Maybe it'll take a bit to now. Now Tone is gone. He's out.
Well, he was. I don't know. I just see a very intense eyes there. Yeah.
All right. So for some reason, whenever I do my own show without other people, it all seems to work. But whenever we have the news show and there's other people on the stream, my screen share doesn't seem to work, which kind of sucks. But if you guys don't see a gold chart, I guess I'll have to maybe do a show later today or tomorrow.
We see it now. It looks good.
You know, okay, so here's the gold chart. Gold's pulling back. This is known as a bearish engulfing candle, which is not good. It's also a multiple extension trend tops, A and C, which is not good. I was looking for a top in gold sometime early next week, but it looks like it's already happening on Friday. It's possible we break out on Monday. So I need to go see my gold and silver dealer today, but we'll see if I can get out. I've been meaning to get out of my silver position, but if silver dropped big today, that's going to suck because then I already missed it. But I may head over there later because I really do want to exit my silver position and move that either into gold or Bitcoin. I just don't want to hold on to the silver anymore. It's too speculative. And what Rodolfo said, what'd you call gold earlier? Shiny what? Oh, you're muted.
Lead, yellow lead or something.
Yeah, I want to make this hashtag trend. It's yellow lead. And that's every time I talk to Peter Schiff on Twitter, it's I call it yellow lead. Because that's what it is. It's just 2 elements over.
So what do you call silver then?
Silver is just like, it's a tarnishing thing you don't want for cutlery. It's stupid.
I think it's just, you know, the original shitcoin, I think.
Wait, hold on. What do you mean you don't want it for cutlery? I actually want to convert my silver bars into cutlery.
No, don't do that. Do you know that, man, the amount of work it is to maintain silver cutlery is insane. I was gifted some like old stuff from family. It's like, it's just always tarnished. It's stupid. Like, you know, you put gold on PCBs because it's like, looks pretty and also is great conductor, right? But silver, man, silver is only good to mix this stuff and use in sort of like medicine and stuff. Just don't bother, man. Really.
So I had this, you weren't on the show, but I talked about it on my other show. So I've been talking about silver and how now that gold can be used as a micropayment, if gold ever becomes money again, silver really has no monetary value whatsoever. So the only usefulness for silver is as an industrial metal. And people on Twitter were arguing with me, and you're gonna love this like logic. And I don't want to make fun of the person because this is how a lot of people are thinking. And a person says, well, silver has all these amazing industrial properties, so so therefore it's still undervalued even without the monetary premium. So then my question was, well, in that case, what are you doing? How do you profit from the fact that silver is undervalued as an industrial metal? And he says, well, I would never buy the derivative. You have to buy the physical and store it at home. So now it's like, well, wait a minute. If silver is so valuable to the industry and your solution is, and let's say everyone thinks like you, that because silver is so valuable in industry, we have to take it out of circulation and hide it in their house. How is the industry going to use it?
It's like this. So the idea of intrinsic value for things that are store of value is just so silly. You know, it made sense with gold when there was no alternative, right? Now that Bitcoin exists, not having what they like to perceive as intrinsic value is the perfect quality, right? You don't want your medium exchange to be useful for other stuff.
Right,
it's silly.
Right. And we've made this argument back, like even when Ethereum was coming out. Well, how does it make sense for your money to also be gas that is burned?
Yeah, it's all, you know, that's the problem with Keynesians, right? Like this is all a Keynesian problem. These guys want velocity. They want all this crap happening. It's supposed to just number go up because you don't have enough. real scarcity. It's pretty hopeless. What are you gonna do?
All right. Anyway, one last look at Bitcoin 4-hour chart. I like this consolidation here near the top. Yes, people got a scare about an hour ago, but looks like that scare is over. We are back above 11.6. I think 11.6 is the number to hold through the weekend. And if we can hold 11.6 through the weekend, I can see the number go up the following weekend to mimic Rodolfo. All right, that's pretty much it for me, guys. No announcements. If you want to support the work, please either check out the on-demand educational videos or just use the affiliate page. I'm gonna go to the affiliate page because I am like narrowing down the affiliates, but the cold card should still be there. There it is. There is the link to the cold card. For the record, I do not profit from this. Rodolfo is there. I'm just supporting good projects. Some of these do give me a kickback. Some of them don't. Cold card is one of the ones that don't. I'm happy to support Cold Card and Open Dimes. All right, guys. Thank you so much for watching, and we will see you all on the next one.
Thank you very much. Your Friday, August 7th edition of Bitcoin Brief. We've got Tone Vays, the host of the Financial Summit in Bali. We've got the author of Programming Bitcoin, Jimmy Song, as well as the CEO of CoinKite, Adolfo Novak, and I'm Christine Lee, your host in New York and journalist. Take care.
Yato and us, this song is done.